No, that would be great. Take a sip of water, get ready myself, and ready to go. Very good. Perfect, everybody. And with just a few more seconds to go, and it will be time to begin. Okay, 15 seconds. That is basically ready now. Very good. That's it. Top of the hour, time to begin. Official welcome to the session. Official hello, everybody. This is Jose Blasco, Feb-13, 2022. This is our top session. So we're going to be talking about top. We're going to be looking at our trading options planner. Before we get started, I wanted to highlight the disclaimers. Please read it carefully. This is important information. It's relatively short. I am always counting on you to read it completely. That is my assumption. So please do so because it is important. Structure for the session, as always, we are going to talk about the platform. Today is a top session, so it's all about top. But of course, many times we cannot talk about the use of trading software and how certain things work unless we talk about trading. So often we mix trading platform time with trading lecture time, and of course, always ready to get your questions and provide you with answers. Okay, so please feel free and definitely be engaged and feel free to collaborate during the session with anything that you may need, and we'll do the best we can to assist you. Important URL for you to remember, tradewithufos.com/Jose. This is the URL that brings you to the question page. This is an interesting place where you can log in, purple button, ask questions, green button, and then all those questions end up here in the bottom part of the screen. Now, as you can see, there is a relatively long list of questions already. So if you have any question, my recommendation would be that you search first, because maybe the answers you're looking for are already there. So please do a quick search first. And if the answer is not there, then of course, feel free to ask questions so we can work with you guys on providing the answers that you need. Okay, perfect. So with all of this said, I see a few of you join the session. Hello, my friends. Good to see you. So with all of this said, it's now time to jump into top and begin our top session. Okay, so I'm just gonna open a brand new chart, maximize it, so remove all studies so we can start fresh with a clear and blank chart, and we can start working on everything that we need to learn from here. Okay, in prior sessions we've been working on studies. We've covered almost everything in the list already, but not everything yet. So today the idea would be to continue more or less from where we left. Last time we were having a very interesting, important, relevant conversation related to the various ways to look at volatility in the market, volatility which could be implied or historical. We saw cases where the implied volatility comparison or volatility standard deviation, things like that. So we could apply, or for example, as well, the options over or underpriced. These particular studies, they utilize information related to implied volatility and historic volatility both, and they perform a series of calculations and plot the results in a certain fashion that we discussed in the prior session. Well, maybe I should have done in the prior session, I should have shown you historic volatility as a study in the prior session, given the fact that it's the most basic of all that talks about historic volatility. I didn't, so I'm going to do it now, but notice that this is going to be very easily understood. If you look at this particular study, and the standard setting that comes by default is 45. So what this is doing really is looking at the speed of movement of that stock, and given the speed of movement of that stock, in this case is the S&P 500 ETF, but it could be McDonald's, for example. So now you're looking at the speed of movement of that particular stock, and it's calculating the historic volatility, which that would be based on the pricing models, that would basically represent, when applied to a daily time frame, it would represent a value 13.39%, so it's a percentage, and that percent value will represent the expected move either up or down in 1 year of time. In other words, you would expect McDonald's to move at a rate of 13% a year, either up or down. You would expect, for example, let's go for a crazy case such as Facebook that had this extremely powerful drop. So the historic volatility at this moment in time is 80%. So you would expect that if Facebook continues moving at the speed it's been moving in the last 45 days, 45 days is coming here from the setting, right? So you would expect then Facebook to be up or down 80%, either up or down 1 year from now. This is basically what this tool is designed to do, and normally by use by itself, it's not that useful, I would say, even though it could be useful if you are comparing stocks and you are looking at stocks that are, maybe you want to take a trade in, I don't know, let's say the technology market, and your trading plan tells you that you are open and okay with being aggressive when it comes to the type of trades that you look for, and you want to trade volatile stocks. Well, maybe you're looking at Facebook. Let's say you are also looking at Apple as a potential company from the technology industry, and you would see how Apple is showing a 29% implied volatility. Facebook, I should say Meta, 80%. Did I say implied volatility? If I said imply is wrong, it's historic volatility. I'm not sure if I said imply, but just in case. And maybe apart from Apple, maybe you want to compare that with Google, and Google is showing a historical volatility of, sorry, I didn't type it right, historic volatility of 32%. So if you wanted to trade something more volatile, then you will go for Meta, obviously, with that 80%. If you wanted to trade something somewhere in between, you will go for Google with 32%. And if you wanted to trade the quietest of the three, you will go for Apple. Again, for comparison, if you wish, I guess it's relatively useful. But it's such a simple tool that could also be somehow substituted by average true range, and we talked about that in the past as well. So if you plot average true range, of course the lines are not going to be the same, and the measurement is not a percentage. The measurement is going to be a dollar value. So Google moves $102 a day, but somehow you can see when volatility increases, this line goes up, this line goes up. When volatility decreases, this line goes down, this line goes down. So it's obviously a different calculation, but in the end, volatility is volatility, and you can kind of see it there. If I move back to Facebook, so you can see how the ATR also jumped, as well as the historic volatility value too. Remember, the very big difference is that this is a projection that represent what may happen 1 year later. Okay, so anyway, so this is a historic volatility as a study, which again is right here. It's a study that it's kind of like completing the conversation that we had in our prior session when it comes to volatilities. Probably if you use any of the DT studies, you won't use historic volatility because those are more advanced, and they actually also plot historic volatility if you want. So probably that's going to be your choice, I would say. But again, for the ones of you that may find an application that has to do with the way you trade, so now you know how to input historic volatility, and then again, you just need to change the settings and the way on how it's calculated based on the source, open, high, low, close, midpoint between high and low, or a third of high and low and close, which are settings that we have seen with many other studies all the time within top. Okay, cool. Okay, so with that said, let's now go ahead and change topic, because we're gonna start talking about DT trend. And for me to be able to talk about DT trend, there is a moment in time where I will also move down here to the Tom's strength level, also known as TSL. So let's begin with the DT trend, because this is a very powerful tool, which, by the way, for now, I'm just going to insert it and I'll talk about it in a moment. But this tool, I just said, is very powerful because it is, but on top of that, it's very convenient. The fact that we can also use on the matrix, and you can actually have certain selections when it comes to stock rotation, stock strength. This has to do with the DT trend, as you will see in a moment. So all of those things are going to make it even more powerful, if you wish. Okay, so or convenient. Okay, we'll talk about the matrix in a different session. The matrix allows us to do so many things that it may take multiple sessions actually to go through everything that could be done with the matrix. But just know that many of the things that we have on the charts could actually be scanned real time when using the matrix. So DT trend again looks like a study that is plotted on the subgraph. I guess it's somehow self-explanatory. The name says it all. It's telling you about the trend, and then you have two colors there, which is red and blue. So when it's red, obviously we are talking about a downtrend. When it's blue, we are talking about an uptrend. I guess it's pretty clear. Also, we have this condition here where you have those little dots, okay? And normally those little dots may be only one or maybe a collection of little dots, but typically at the end, when those little dots are over, that's when now you either get red or you either get blue, okay? And this is very useful to understand what we call rotation. Rotation meaning going from an uptrend to a downtrend or vice versa, in a way where there is some sort of a decision in the process. So you can see here where all those little lines or those little dots are happening. Then if you were to look at it carefully here, the market starts going higher, but the web price is moving is not that strong, and therefore the little dots remain until later in time, where now you have a bit more evidence, and now it's telling you an uptrend begins. There is a bit more confirmation of that uptrend beginning from a technical point of view. It's similar, even though it's not the same. So if I was to add AutoClimate, which is a tool that probably the majority of you use. Of course, first of all, the settings are not necessarily the same, and you can certainly adjust AutoClimate. But notice that, where was I? I was here. So notice how AutoClimate is a bit more reactive in the sense that you would have seen some blue and would have allowed you to catch a portion of the move before here you were being told it's beginning. So again, it's important that you understand this concept because again, none of those two tools that we have in the bottom part of the screen, either AutoClimate or DT Trend, are tools that are designed to be used as a market timing tool. You don't go long because it's blue, you don't go short just because it's red. In none of them that would be the case. Those tools are designed to give you more information about the market context, which is basically opening the door. It's kind of like a permission system, opening the door for you to begin trading in that direction or not. That's what this tool it's trying to do. So in this case, with DT Trend, you will not be allowed to start planning on long trades until much later. With AutoClimate, yes, even though of course the statistics would also stop you. Climate is supposed to be a duration of 5 when it's up. So after 5 dots, you will start thinking, oh, this is now less probable. You would expect a turn to the red, and then now you start trading again. So of course now, if you start trading again when here you have blue and here too, so somehow now you have even more evidence that probably whatever is about to happen is going to continue or be stronger. It's not a guarantee, of course. It's all technical analysis, and it's based on the data we have on the screen. And what we don't have on the screen is the most interesting part of the equation, which is the future. So obviously, it's all about probabilities and statistics and market analysis and assessment of market conditions. And it's indeed very smart, but make sure you don't use it as a timing technique. If you were to use it as a timing technique, I would certainly recommend it. You're probably reading my mind to utilize auto UFOs, for example. So now you can be more precise with entering in the right type of market condition: blue, time to go long; red, time to go short. Okay, so keep that in mind. So the definition of DT trend has a lot to do with not only the trend from a directional point of view, but also the strength, the momentum built in, the energy that is happening behind the scenes. That's why you saw here that even though the market here was moving up already, you still have those dots. Okay, so in other words, when you start seeing color, it means that strength, significant strength is coming in. Notice how there are many cases where the duration of those dots, it's quite long, meaning that there is movement, but there is no significant strength. So DT trend is looking at that component of significant strength, with the assumption that when a market is very strong, it will tend to continue. Of course, later on, you could also argue the opposite is true. When a market is too strong, it may be not sustainable and may reverse. That's why later we will talk about the other tool, which is the thumb strength level. Okay, so I'll talk about that later on, which also has the strength word built in. Okay. Now, something which is very relevant and very important of this tool, and for you to see that visually, I'm going to add it again, DT trend, is that apart from the symbol, you can also select the trend, not of that symbol, but also the group that stock belongs to. In this case, we are dealing with Meta. If I look at the group and I click OK, we are now looking at computer services, which is the group where Meta or Facebook is in. And if I was to add this again, and I was to add DT trend, and instead of symbol or group, I add sector, okay, and I click OK. So now we are looking at the whole technology sector as a whole, right? So in this case, okay, you can see how that particular stock, it's crashing like the world is ending. The issue is not only that the stock is crashing, the issue is that the environment, the ecosystem, if you wish, when it comes to where that stock belongs, it's not very good, right? And the area in the planet where you would think of the weather of the ecosystem, it's not good either, right? So odds are that Facebook will take a while to recover from such a drop, even though anything could happen, and certainly such a big company like Meta may next thing turn around, speed of the light, and actually lead the sector and the group to become blue, because that stock is so highly capitalized that it could indeed do that. But in general terms, the stocks are a fragile thing, and the stocks are highly depending on their sector, their industry, even stocks that are competitors. In this case, I'm thinking of Twitter, for example. Okay, so if we look at Twitter, so Twitter, it's not in such a bad position from how much it's been dropping lately. It's been trading sideways lately. Actually, you can see sideways price action while Facebook was being killed, but it still belongs to computer services and technology, and therefore we still see the same red that we saw with Facebook. Okay. Now, all of these, notice that the current analysis I'm doing or explanation, it's using medium all the time. Another way you think of medium is daily time frame, because I can also move to an intraday time frame, right? And even if I was to move to an intraday time frame, I still see my reds and my blues. But notice how they are not aligned with each candle. Notice how there is a horizontal line here every time. If I move to a 5-minute time frame, which is even smaller, so notice now, let me do this. Okay, notice now that here basically it's the prior day and this is one day, right? And notice that for the whole one day we have the same result. So in other words, coming back to the daily time frame, every time you are using medium, no matter the time frame, the result that DT trend is giving you has to do with the technical analysis of trend applied to a daily time frame. And if I was to switch this to, instead of medium trend, long trend, and I click OK, even though I'm still using the daily time frame, that particular result here that uses the word long, that particular result has to do with an application using the weekly time frame, even though, one more time, the stock is using daily. The trend is now being analyzed in a weekly time frame, and below I still have medium, meaning the ones below are still daily, which of course I can go ahead and change to a longer time frame if that was part of your methodology on how you trade and how you do market analysis. And now everything now is representing a weekly time frame, even though the time frame that we have above is daily. Again, if I move back to a 5-minute chart, so notice how it's all flat. There are certain fluctuations, okay, as you can see, because of course during the week price move, Yeah, so again, it's now representing a longer term trend instead of a shorter term trend. Okay. If we change industry, everything changes. For example, McDonald's belongs to restaurants, which is inside consumer services. And again, if I go back to medium, okay, here we go, medium and medium. So notice how. So we are dealing with a stock which, recently it's showing some lack of decision when it comes to its trend, but probably the lack of decision is because it belongs to weak groups and weak sectors. If we were to look at other companies, I'm thinking of Merck, for example. So Merck is a company that belongs to pharmaceuticals, and that is within healthcare. And in this case, we also see a lot of red. I mean, the market has been dropping recently, so that's not a surprise. But again, you can see how DT trend is automatically, as you change the symbol on your chart, is changing the grouping as well as the sector, which is very, very powerful. I'll do one more. Johnson & Johnson, for example, that one is blue, okay, but it belongs to red and red, which is again same pharmaceuticals and healthcare. And if we were to think of something else, for example, British Petroleum, for example, just to go for a totally different sector. So we are looking at medium for the stock is blue, but also oil and gas integrated is blue, and oil and gas as a sector is also blue. Okay, so very relevant tool. I'm going to get rid of the 2 in the bottom part because now I want to relate and expand this conversation. I want to relate this conversation to thumb strength levels, which I am adding here now, okay, which looks like that, okay? And I want to add a bit more data in this case, just to be able to scroll right and left with a bit more data. Okay, here we go. So now, what is this tool doing? Well, this tool is creating another subgraph with little graphical representations. But notice how they are 4 colors. Okay, so you got the blue, you got the purple, you got the orange, you got the yellow, and this is on the way down. But if I look at the way up, it's the same thing. You have the blue, you have the purple, you have the orange, and you have the yellow, right? And so you have 4 colors above, you have 4 colors below. In this case, it's only 3, but you also know below is the yellow. And then you have this middle band, which is that middle segment separating the above graphs and the below graphs. And also, finally, within that middle band, you sometimes, not always, have these little squares that may show on the upper parts, or you have these little squares that may show on the bottom part. Okay, so what is all of this? Well, this is obviously very much related with trend. Notice how the trend is blue, so the drawings that we get below are above. Notice how when the trend is red, the drawings that we got below, the drawings that we got below are on the below part actually. Okay, so it's below. So definitely thumb strength level are looking at the trend, but beyond looking at the trend, as the name suggests, is looking at the strength, which we also said the one above is also looking at strength, but in this case, it's normalized. And what we mean by normalized is that basically the strength is now measured in 4 levels. So it could be, strong, very strong, very strong, or very, very, very strong, right? So it's 4 levels of strength, or the weak or weakness, 4 levels of weakness: weak, very weak, very, very weak, very, very, very weak. Okay, so obviously in this case, this is now giving you a more specific way to set your market conditions. Maybe you are a trader who is not only conservative but very conservative, and you decide that, look, so this particular market condition here, okay, it's telling me it's time to be a buyer, okay, because it's blue. But I don't want to be a buyer when the strength is blue. I want to be a buyer only when it gets to orange. Okay, so when it gets to orange, basically you are talking about being in that particular section. Of course, for this to become orange, price need to travel a lot. So you may end up late to the party. That's the downside of waiting for so much strength coming in the market. But when the market is so strong, you may get something very strong. That's when you may get a situation where you buy high and it goes higher. You buy expensive, it becomes even more expensive. Where you would think that buying expensive is always a bad idea, which, to be honest, many times it is. But when the market condition, the environment, is so much in your favor, then it may not be so bad as an idea. Okay, especially if you have been looking at the sector as well and the grouping. It's like everything is blue or red, and on top of that you are in a level of strength which is number two, number three. So that could be quite powerful. Now, of course, when you get to number four, so I would say that now uh, probably it's not too useful, because first of all, number four implies that the sustainability of it's very much to be proven. Okay, it's probably not there. Okay, on top of that, how many cases of yellow you find? They are rare, and therefore, if your trading plan had you trade the yellow cases, so I would say probably you will end up in a very good position, in the sense that you won't be very active as a trader. But again, that could be part of your plan, understanding the pros and the cons. The point is that this is now set in a way that is very specific, because it's normalized. So not only what the trend direction is, but you also know if it's number 1, 2, 3, or 4, and you can have trading plan rules around that. For example, not to trade when it's the light blue, only to trade when it's the purple. Okay, and now you have a greater level of potential for success, if you wish, from the point of view of catching something strong in your favor, because you got that particular level 2 of strength already built in. Okay, so again, it doesn't matter if it's future stocks, whatever is it that you chart. It doesn't matter if it's intraday, for example, 5-minute time frame. It doesn't matter what it is. You will only get those 4 colors. Okay, so you can then evaluate what to do. So, for example, here, when it became so weak, right? You're at level 4. So it dropped a bit more in the end, but not that much more. And then when a reversal took place, it was a complete change of trend. So again, the yellow, it's really that situation where it's not that sustainable, where the other colors, if you are trading in the direction of the trend, probably it's a much better idea. Now, applications of yellow can also be done, especially when using options. If you are looking at counter trend trades, for example. So let's say, for example, here you see oil, in this case is BP, okay? Or maybe we can look at an example with the S&P, for example. So you look at the S&P and you see the S&P is falling like crazy here. Okay, of course, you don't know if this is the beginning of a bear market. Indeed, this is red, but we also know yellow is often not sustainable. So maybe you are looking at this and you're like, okay, so this may be a very strong drop leading for a very strong change in direction, like it happened here. For example, here it didn't go all the way to yellow, but almost. Okay, so what could you do? Well, the beauty with options is that you could apply certain techniques, right? So, for example, if I on that particular date, if I were to sell bull put spread below price, and I were to use that credit to go ahead and buy calls above, right? So what happens now? As the market is moving higher, I'm making money, but if the market was to go lower even more, well, I'm not losing money until I get below that put, and my risk is limited thanks to that other put. So in other words, you now have another amount of space where that stock will need to continue falling through all the way for you to start being hurt by this trade. So you have created yourself a buffer that allows you to be wrong by a certain amount with a market condition which is likely to be unsustainable, right? So that could be a very smart application. Again, you can scan for this. You can scan for market conditions where the strength levels are all the way on the yellow, and then you may be able to find those particular situations. With an ETF, of course, you're gonna get less cases of this. Again, we got one here at this moment in time. Okay, so this is an example of make sure you use UFOs or something else to do these trades, because here it was yellow already, but notice how much more it dropped. So that's why it's important to do these particular applications, right? So with options instead of just getting a trade, because you would be against the trend if you were to do it directly. So for example, at this moment in time, it's yellow. Okay, it's yellow. So if I was to load auto UFOs, right? So you have a collection of UFOs here. If you were to look at, what pivot points would need to be broken to go to those UFOs. Sorry, I just didn't click in the right place. So you would just move this line here, and notice how it says that somewhere in here is where the reversal could take place. So you could certainly go ahead and start planning on those UFOs, as I said before, with puts, and when that happened, okay, and it went where the UFOs were, okay, and of course because of the drawing effect and so on, our speed bump tool recalculates and repositions itself. So notice how crazy violent the move was, because it went even beyond and below, but then at the speed of the light as well, it turned around, and if I fast forward, it went extremely higher. Just like 1 month later, it was higher. So again, with techniques of that sort, you could have survived the fact that since the yellow started, it went beyond that, okay, even though it's unlikely, okay, because you reach to a level of strength which is supposed to be not sustainable anymore. But that is how sometimes it'll keep going, okay. So again, the yellow, as I said, the summary about the yellow is that it's not that useful, if any, for counter-trend trades. And if you're going to do it, just be very careful and ideally use option strategies that are smart, that allow you to limit your risk and give you an extra buffer that allows you to be wrong. Because again, those tools are not to be used as timing tools, as I said before. Those are tools that are telling you more about the market condition, which is extremely important and powerful to understand. But the UFOs and everything else, that's what you want to use for timing the markets, because that will add so much more precision instead of only looking at the market conditions. What else? So let's say, for example, you are looking at a long-term trend, okay, and long-term trend, when you select the setting of long, typically the long-term trend will last longer because it's long. But also in the case of the S&P, this is a perfect book example. Not always like that when you trade stocks, but the S&P ETF is a perfect good example, because for years it just keeps going higher. Even when we had the crash in 2020, in the crash of 2020, of course, we ended up in the red. But the moment we came back to the blue, it's been blue, forever. And before the crash of 2020, it's also been blue for a very long time, right? So let's say you want to rely on a very long-term trend while you are looking at the strength in a daily time frame. Well, then one application of this would be that you wait to have those intermediate boxes and get ready to get into trades at that time. So for example, when you get this box here, this coincides with the market starting to fall, but the way the market is falling is not falling in a way where the strength is picking up direction too much in order to become a downtrend. And in this case, to be honest, it happened, because you can see how this little mountain below took place, and it would have gone lower, and depending on the precision of your timing, you may have lost. Just like here as well, even though here in this case you didn't have that box, okay, because the way the market was falling indicated a potential change of trend. But other cases, and it should be most, okay, because of how intelligent this programming has been done. So other cases, when you have that little box here, would normally bring you to places where you have, let's call it healthy corrections in the context of a longer term trend, And this, of course, it's an application for investors more than active traders, but certainly it could be very interesting to go ahead and rewind the market to those particular situations. Okay, somewhere here, for example, again, I don't know why I took it off earlier, but let's re-enable the UFOs. Not sure if we have UFOs at this price point, but now the market is falling. You get your little box, and unfortunately the UFO is a bit lower, but if you had a UFO, now you could get into a trade, that is likely going to well, likely depending on how you set it up, but it could certainly work well for you given the rationale of what I just discussed. Here there is another box forming. So again, if you had UFOs on the screen, which in this case we don't, so you would start getting ready to get into the trade, expecting the market to move higher, and it did. Actually, just a bit before, right here, you had the UFO price came in. The little box is still below, and you could certainly enter it and expect that market to continue, which it did. So again, little tips or eye-opening conversations, hopefully, that help you to understand the rationale behind these tools and how you can combine them to plan your trades. Again, what I'm discussing right now has a much more long-term type of approach compared to other comments I had earlier in the session, which was more about active trading. Okay, but anyway, there is a couple of things extra I would like to comment as well, but also I need to get some feedback from you now. It's been basically 30 plus minutes, and since we started, I didn't get anything from you guys, which probably means that you're making notes, you're listening carefully, but now I am sharing the chat box on the screen. I would love it that you guys type something on the chat box, something meaning if you have any question, go for it. If you want me to repeat something, go for it. If all is good, please type all good or something like that, so I get to know. Okay, and that would really be nice for me to see. And I'll give you just a few seconds to do that while I take another sip of water. And I know based on some emails that you guys send and so on, that often what happens in the top sessions is that you are multitasking a lot because you are taking screenshots of my screen, making notes, trying to practice or replicate what I'm doing while I'm doing it. So I could understand if typing on the chat box now is not too convenient for you. I get it. So I'll let it go then. Okay, but just keep that in mind for the next time when I ask. Okay, if you don't mind, because I see you guys there in the room with me, guys. So please be engaged with me, guys. So that way I can lead this conversation to a place that is more useful to you. So please do that. Anyway, so remove study. Okay, great. So now, what else are we going to talk about? The next subject I wanted to address today has to do with a couple of more tools that we have a bit lower in the list, okay? Because we looked at DT trends, so going down the list, we have earnings, in this case, options replay, and a bit lower as well, you also have options replay. So I would like to talk about options replay and earnings options replay. This is what I would like to discuss now. Now, let me remove all studies one more time so we start fresh. And of course, since I'm going to talk about earnings, we better get a chart of we better get the chart of a stock because there are no earnings on SPY. So I'm just going to use Home Depot, for example. Okay, so let's look at Home Depot, and this is a daily time frame, and I'm going to go ahead and add options, earnings options replay. Okay, and for now I'm not gonna even look at it. I'm just gonna click OK, and then I'll come back to this and explain what is what. Okay, so I'm gonna click OK, and you just wait for a little bit, and now in the bottom part of the screen a few graphs will appear that are simulating and emulating P&L performance of you doing earnings plays on the earning dates. Okay. Now, let me explain that way better because this is extremely powerful, but it obviously has multiple settings which are critical to get what you want, depending on what is it that you want and how you trade and how you plan to exploit earning plays. So let me go ahead and also add the earnings indicator, which that one you know from prior sessions. I want to add it. And also I'm going to expand and draw the line. So vertically speaking, on the top part of the chart, you can very clearly see the earning date, which is being pushed all the way up. So now there is no doubt, we know stocks report earnings every 3 months. So there is no doubt that those are the dates where earnings were reported. We have here 3 back tests, right? 3 simulations of a specific earning play where, a specific type of results have been achieved on Home Depot. So what is it? How does that work? How do I adjust it? Well, it's all about when you enter it. Okay, let me remove it one more time. Remove, that's better from here. Remove study here. So if I go back to add study, and one more time I add earnings options replay. Okay, so when I do that, first it's telling you to start the trade, in this case, 5 days prior to the earnings. Okay, so by default, the trade would start 5 days before the earnings. Your trading plan may be, I mean, 2 days before earnings. I mean, 10 days before earnings. So whatever that is, you would want to input that number. Okay, and also here it says that you may want to simulate for the whole data on your chart or only use the 3 most recent earning dates. That's why we only got 3 results, because I had that mark. It's prudent to not to uncheck, because depending on how many candles you have on your chart, how many bars, you're going to be downloading a tremendous amount of data, which is not only chart data but also options data, and it may take really, really long time to load. So I would say, just think about this before you check or uncheck or change the parameters. In my case, I'm going to pretend that I want to simulate 2 years of earnings. 2 years is 8 earnings reports, 4 per year. So I'm going to go for 8. That's 2 years. And then coming down now, it shows what is it that you're trying to simulate. Are you trying to simulate a long straddle? Are you trying to simulate what? How do you play earnings? Some people may decide, the way I play earnings is crazy safe. I just do short iron condors. That's it. That's what I do. Some are going to be, I'm more aggressive. I do a long strangle. So again, depending on your style and your trading plan, let's pretend you do short iron condors. Okay, and also let's pretend what you want to see is the dollar change, or you want to see the dollar value, or you want to see the percent change, right? So dollar change will basically tell you the P&L. Dollar value will show you the value of your spread, how much you got filled at when you enter the iron condor and when you exit. And the percent change is, the percent profit or loss out of the margin required to do this trade. So probably the most visual is going to be the dollar change, which shows you the P&L, so you can see if you profit or you lose and how much. And then here below you have colors, okay, which that I'll let you play with it. I'm just going to leave it alone. Okay, so when I adjust those settings and I click OK, so again now I'm going to have to wait, because again it's 2 years of data with options that need to be downloaded. So be patient. Okay, it started to plotting here, so it's again downloading and processing data. And we're going to have the results in a moment. Let me shrink a bit more so we get 2 years of data. So 1, 2, 3, 4, 5, 6, 7, 8. Here we go. So those are the 8 particular data sets. Okay, so now in here, if I put my mouse in the last candle of that earnings, so you can see that it ended up as red, and to be specific, we lost 131. So if you had done an iron condor on that earnings report starting 5 days before, right? So you would have lost 131. If you did it on this one, okay, it's also red. In this one, you would have lost 89. If you have done it on this one, okay, you would have made $323. Okay, you can see it's green, $323. If you had done it on this one, you would have made 222. If you have done it on this one, you would have lost 130. Done it on this one, you would have made $28. Done it on this one, you would have made $240. And done it on this one, you would have lost 73. So overall, in the case of Home Depot, doing short iron condor starting 5 days prior to earnings, you would basically conclude that the strategy, just through time does draw some profit in, isn't it? Again, this obviously changes through time, because it's earnings sensitive, so it depends on the premium you get, it depends on the movement you get through earnings. So I guess that's self-explanatory, but it's a good way to understand, what's possible with that particular stock, with that particular methodology. Now, let's say you tell me, oh, you know what? But instead of fire on counters, what if I am very aggressive and I just do short strangles, okay, with no protection? Okay, so let's see what happens. Okay, so if you did short strangles, so again, we need to wait for a little bit, and the simulation is now going to show. And of course, both the profits and the losses are going to be way greater values. So the initial loss was $6,000 of loss. The initial winning was a small. The next winning was 118 only. The next win was 1,800. The next win was 1,700. The next win was 282, etc. So that one, even though it seems that most of the trades won, only one lost, you would have lost actually, because risk management was not in place. With a short strangle, you are totally naked in front of what may happen to your options trade unless you exit manually, which you may not be able to because earnings are reported when the market is closed. Even though this trade is held until the expiration date in this case. Another story is, what if you exit after earnings? So you can put your mouse right there, and you would say that the day after earnings, the profit is 286. What about this one? Well, the day after earnings, okay, the profit is, the loss is actually $39 only. So again, if you were to exit the day after earnings, it seems that this particular methodology may have made money for you. But again, it's how you would assess the pros and the cons of different methodologies. Now, so far, by double clicking on the line, by double clicking on the header, I got access to that particular simulation, that particular set of rules, and this allows me to do all of that. But now you may be wondering, but wait a moment, that's not exactly what I want to do, because in this case, we are doing a short strangle, but which are the strikes that are being sold? Well, in this case, the strikes are the 240 and the 245. Okay, in this case, if you put the mouse there and you just wait, it will show you the strikes is the 225 and the 230. If you go here, then the strikes are the 270 and the 275. Same with the expiration date, September 18. Is using the next monthly expiration date after the earnings report. So you put the mouse in here, okay, and it's telling you December 18 to 75 to 70. So the distance between strikes is set automatically, and also the expiration date is also set automatically for you, which is a great first step to understand if a methodology is going to work or not. But maybe that's not how you want to trade it. Maybe you are more advanced and you want to change certain parameters and you want to do some tweaks. So what can you do? Well, that's when the options replay without the word earnings. Okay, so not the earnings options replay, but the one that is called options replay. That's where this tool comes into play or into place. Bad joke. So that tool, to be honest, it could be used for anything you want to do. It doesn't need to be earning plays. It could be done for whatever you want. But my first application of it, it's going to be to fine-tune the earning play, right? So, for example, we are doing short strangles. Okay, we are doing short strangles. Okay, so I'm gonna select short strangle. Okay, this is what we were doing here with the prior change I made to the tool. So I'm gonna do the same thing. I'm gonna click OK. What this tool is gonna do is it's gonna give me that only one vertical line. So what I could do with that vertical line is bring it to one of the earnings report, for example, that, or maybe I want to assess that one. This is the one I'm interested in. So you can bring the line here. And when you bring the line here and you wait, so now you're going to get here a result, which, as you can see, the result above and the result below are different. Okay, why is that? Well, because the starting date is different. I brought this line to the earnings day, where the beginning of this trade was actually 5 days prior to earning. Okay, and if I do that, so now I get the same result with both. So in other words, I got the same thing above and below now. Okay, I get the same thing above and below. Now, let's say you tell me, what if I change the expiration date? What if I change my strikes? How can you deal with that? Well, now what you could do is put your mouse where the vertical line is below, okay? And you can right click. And when you do that, now you have this window where you can edit that spread, the one below, okay? The one above is not editable, it's automatic. So if I go where the line is and I right click, nothing happens. I mean, I can get properties, but the properties apply for the whole thing. It's the earning options replay property. But on the one below, if I put my line on the vertical line and I right click, I get the spread. Where in this case, we're doing December 18, 270 to 75. So what if we did 280 and 265, and instead of December 18, what if we did December 11? So if you do those changes and you click OK, the whole thing is going to be plotted for you here, and now you're going to get the result. Of course, the result is being given to you in a different date because this one below expires on the 11th, where the one above expires on the 18th, which is a bit more to the right on your chart. Okay, you can see the differences in the P&Ls, and that is a fantastic way for you to do your back tests. Because another way to do that, of course, would be load the option chain. Okay, and with the option chain in place, so the starting date for this trade was 11/10/20. So you can go ahead to find 11/10/20, which is right here. Okay, you will load the option chain on that date. You will now only look at December 18, and now you could go ahead and look at the value of I think we said 280 and 265. So this is your 280. This is your, I need to load more strikes to see the 265. Let me load 7, for example. So here is the 280. No, it was not 280, right? So what was the strike here? Yes, 280. Okay. So yeah, for whatever reason, I thought I was wrong. So 280 and 265. Now you can see your strikes, and you could go ahead and open a spreadsheet, make a note of the values, make a note for the call side, and then same for the put side, and then basically then go back in time to the expiration date and or any other date in between, and using a spreadsheet, just grab the values manually, put that on a spreadsheet, and get the results. You will get the same. But obviously, I guess you are with me on how tedious that would be. It would take forever. Okay. By the way, when simulating this way, the prices that are being taken from the option chain are not the bid, are not the ask. Okay, they are the last. Okay, we are not taking the bid or the ask. We are taking the last, because when the option chain, basically when the market closes and you see that last value of the day on the option chain, often you have these wide bid ask spreads. Maybe on the last few minutes of the day, there've been no trading, and therefore the price you see for that options contract when looking at the bid and the ask does not represent well what you would get if you had traded that day at that time. So in other words, the last is a bit more realistic, even though there are all sort of cases. Of course, options pricing is a complex subject, but we find with our experience that the last does a better job at back testing options data versus the bid and the ask, unless you are dealing with extremely liquid markets like maybe the S&P ETF, things like that. So everything here is done with the last, okay? And the beauty here is that you could, on the bottom part, you can change it, okay? And not only you can change it, you can do things that are not standard, because now we are looking at standard option strategies such as a strangle. But for example, let's say removal studies. Okay, so we'll start fresh again. So let's say, for example, on a specific date, okay, you wanted to simulate an options play, right? So I'm gonna load options replay, click OK, okay, with whatever came in, and now I have this vertical line, right? So let's say, for example, I wanted to simulate what would happen if my trading methodology would tell me to take a trade on that particular date. So I just moved the line here. But when it comes to simulating the trade, okay, I could go ahead and again right click, okay, and when I right click, I could now go ahead and do whatever I want. So you can use, for example, classical strategies such as bull call spread, click OK, and get the simulation, even though the strikes are given to you by default, which you could then, of course, as I did before, right click and then change the strikes. You're like, okay, instead of November, I'm going to use December, and instead of 340, I'm going to use 360. Click OK. When you do that, the whole thing is now simulated for you, so you can see the differences. But also, what's beautiful is that beyond utilizing whatever is here, okay, I'm just going to remove everything with the red X. Okay, you can just enter options legs. Okay, maybe you are doing something fancy. You are like, okay, I'm buying one, I'm selling two, and I'm buying one is all calls. So that would be a butterfly, but I'm gonna do it in a way which is a broken wing butterfly. So one of the strikes is gonna be far away. So 350, maybe I sell 365, and then maybe I buy 405. So the distance between strikes is not the same. That is a broken wing arrow butterfly. So when I simulate that, okay, it gave me a profit, okay, but the name of the strategy shows as unknown because it's not a standard option strategy that all brokers or everyone would know. Also, I can change my expiration dates, and maybe I'm like, you know what, but the ones I sell, I'm gonna do with a different expiration date. So you can get super creative here and do things that are not in the books and simulate that and see what happens, okay? Or even you can go ahead and be like, okay, but wait a minute, what if as a delta hedge, I was to also enter a stock leg, and I was to together with that strategy be short 10 shares of stock, okay? And I click OK, right? And when you do that, now it's calculating the P&L of the trade, including the fact that not only you have options, but also you have 20 shares of stock in the mix. So all of this could be done, and it's extremely powerful. Both if you are in learning stages and you want to understand better how a methodology or an option strategy works, but also when you are building advanced option strategies or mechanics to manage a portfolio, whatever that is, which could be extremely tedious because you would be depending on the option chain and getting values from a place and put that on a spreadsheet. So then utilizing a tool like this, it's very convenient. Finally, and we'll end the day with that, apart from right-clicking on the vertical line, which I did, which is how you access the details of the spread that you can do whatever you want with it, okay, and click OK and simulate. So apart from that, you can also right-click instead of the vertical line. You can right-click on the graph itself, and when you do that, you end up with an option which is properties. And when you do that, this property brings you back to the same menu that you would get if you were to double click on options replay. Okay, and the reason why I'm bringing that menu up and showing you two ways to get to it is because you can also change your dollar change, which another way to say dollar change is P&L. So 715 is P&L. That's how much you will make per contract. You can change that to dollar value. And if I do that and click apply, so now you can see how it shows minus 2,234, which that is the value of the spread. Okay, so it would be a credit. You would close it for a credit of this particular value. Okay, so that's the value of the spread. And a percent change, I guess it's pretty obvious. It would also show you how much that particular strategy has lost in value, which is 24%. And again, because this is a credit trade, obviously, you made a profit on this drop. This is the drop of the value of the spread. Okay. So anyway, this takes care of today's session. Before we say bye, I'd like to give you the opportunity to share with me how things were, how did it go, how is it going with trading, how is it going with top, how any questions. This is final chance for you to basically talk to me before the session is over, and if there is anything needed, I'm happy to extend the session by a bit and of course answer your questions. But if all is clear, then I'd really appreciate a quick yes, all is clear, and then we'd say bye to everyone. So please let me know. Thank you for that, Mark. Definitely need to rewatch. I get you. It's packed with information when we get together on the Sundays, isn't it? With the top sessions, but Yeah, the beauty is that it's there for you to rewatch, and I am often bringing new features in, and or go deeper into features that you have seen before. Maybe you play with it by yourself, but you never got as deep, and therefore I understand the need of rewatching it again. Okay, when you rewatch it, if you have questions, of course, shoot those questions, Mark, and we'll talk about it either on emails or the question page or in future sessions. Very good, everybody. No, I did not see any prayer coming from you, Christian. I did not get any prayer coming from you, Christian. This is quite strange. Would you mind to copy paste those comments so I will get them now? Maybe what? Thank you so much, Joe. That's very appreciated. Oh wow! So I think Christian, there must have been a problem with the chat, because I am getting your comments now, but I got absolutely nothing at all earlier from you and as well from Joe. So I am very sorry about that. Do you mind, guys, to copy and paste those comments one more time, so at least I can give you those answers? I know it's late, so if you have to go and you prefer to send me that in an email or on the question page, I totally understand, of course. But now I know I can read you now, but before I didn't, so I feel terrible about that. Not sure what happened. Okay, I'll just be waiting for a moment. Joe, I just asked if using Elliott wave with TSL would make better use of the indicator. Yes, very smart approach. Very, very smart approach, because Elliott wave is not looking into strength. Okay, it's looking into waves, market behavior, which has a lot to do with market psychology and things like that. Extremely powerful and very smart, but he's not looking at is not looking at the environment, the market condition from a trend or strength point of view. Of course, when a wave is progressing in a certain direction, well, it's obvious that the trend is in that direction. But the way the wave is progressing uh, may not imply more or less probabilities for the trade to be taken. So certainly having a combination of that sort, it's indeed intelligent. So you can go ahead and look at the Elliott wave, okay, and then together overlay the strength level, or also you can look at the trend, especially if you were to look at the sector, for example, that could be very useful. And when you do that, so now, for example, you have an Elliott wave turning point, and in this case, you don't have a little box there. Okay, so then I guess you would pass. Okay, but when it changes to here, not only you are in that trend, it's a potential Elliott wave that is now developing. So using UFOs, for example, entering could make sense. There will be other cases like here, for example, where you get the indication and you have that little box. So that indeed increases the odds of this working well, or better, even though, of course, everything you do in trading, especially with stocks, which are a fragile um, instrument by definition, because they depend from stocks and everything else. So I would certainly encourage you to backtest it, and also backtest it combined with the DT trend right here. Okay, based on its sector or group. Okay, and this should make a big difference. Okay, so anyway, here we go. And Christian, have a suggestion for top one: allowed to manually add a subtotal line in the positions window, auto update positions after making changes in the risk graph, and 3, add Greeks to the available fields in positions. I get you, and I understand the use and the rationale behind your suggestion. That is very nice. If you don't mind, Christian, if you could send me this very quickly on an email, that would be very appreciated. Because for sure that's gonna go in the list, and we're gonna consider that and look into it. It's for sure something that could not take place in a very short period of time. because we have other things going on at the same time too. But certainly your suggestion and anyone's, for sure, we are listening wide open and happy to make the platform better and better every day. Okay, so very, very appreciated. Very cool, everybody. So, well, now I guess that it's time to say goodbye. Thank you for joining me. Always appreciated, and of course, special additional thank you being on the Sundays. I love it on the Sundays. To me, it's super relaxed, but at the same time, um, many of you, I will guess that you need to watch it recorded because it's Sunday. So if you are with me today live, so thank you very much. And if you're watching recorded, if you're watching the session recorded, I totally understand, and I thank you very much as well for doing that. You guys take care. See you soon. Bye bye, my friends. Bye bye.